All right. Hello. Let's just make sure my volume's on. All right. Should be good. You should be able to hear me. So we're going to start. Just go over this assignment briefly. It is a confusing assignment. I should have made this video a while ago. Going over the merchandise template. And what the point is really to show you some different breakdown calculations so then you could build the two different styles of income statement. So what you're going to see is bigger companies need this big hectic income statement. It's called a multi-step income statement because it has a lot more to it. Smaller companies only had this little baby income statement. Of course, we prefer the baby one when we're preparing, but the bigger one is necessary for corporations. If you're an investor, you want to look and see every little detail that they had rather than everything just jumbled together. But to start, let's start with these calculations up on top. So they're kind of random calculations. It's not like you need to do these um, before you do anything. Normally, you already have them calculated. Normally, it's just straightforward. But part of the assignment is that it just wants you to calculate them. And again, I say it like this, that the assignment wants this. I didn't build the assignments in the course. At Herzing, they just come pre-built, but I'm still going to go over it with everyone. So the first part is net sales. What they want you to identify, this calculation, is net sales, which net sales means how much did you earn in sales revenue truly. And that means what did you sell, your sales figure, which should be given in the problem, okay? But then what you actually have to subtract from it to get net sales is your sales discounts and your sales returns and allowances. Because discounts, they reduce what you get from sales. You know, if a shirt's $100 and you get a 10% discount, the store's only going to make $90 on that shirt now. And sales returns and allowances. In this figure is your full sales. It doesn't account for, hey, did you have to return $1,000 except returns of $1,000 from a customer or $19,000. So net sales in that first category is going to be your sales figure. So subtract from minus your sales discounts and your sales returns and allowance. And that's your net sales. Next, cost of merchandise purchased. Okay, so this is where you get your total cost of merchandise purchased to use in this problem. And what your cost of merchandise purchase is first it's going to be what is your invoice amount of cost of merchandise purchased. Okay. And the problem shows you here when it comes to your merchandise inventory. This is everything you're going to need for this calculation. So invoice cost of merchandise purchased is the first thing you start with. See, figure here. This is just you call someone, you're a business owner and you want to order 1,000 shirts to sell in your business. The shirts cost $129,000. Okay. But that's not the true cost of this merchandise to you because you have purchase discounts and purchase returns and allowances. So these two are the opposite of sales discounts and sales returns and allowances. Again, these sales stuff, this is when customers return stuff to you or where you give customers a deal. When it comes to purchases and merchandise, this is when you are the customer. So this is purchase discounts. This is us as a business owner, we're getting a discount. Purchase returns and allowances, this is us as a business owner returning some goods. So it's the same concept as sales. We start with invoice cost of merchandise purchase, but then we have to subtract our purchase discounts and our purchase returns and allowances. But there's one final step, cost of transportation in. So transportation in is when we have to pay for the merchandise to ship to us. Since we are paying for it, whenever you pay as a business owner for the transportation, the shipping of merchandise to your company, you actually add the value to the total cost of your merchandise. So down here in this step, you're going to start with that invoiced cost of merchandise purchased. You're going to subtract your purchase discounts and your purchase sales returns and allowances, but you're going to add in your cost of transportation. And then that'll give you your total cost of merchandise purchase. Now your total calculate selling expense, the file has an issue. I can't override the file because it's built in with the course. It says total cost of merchandise purchase down here. What we're calculating is the total selling expense. Okay, so this is total selling expense. And total selling expenses is a way to categorize different types of expenses. Specifically, what expenses are related directly to the sale of physical goods. That's what selling expenses are. So if let's say you have two workers. One worker is out on the sales floor and they make $50,000. Okay, they're selling the goods, promoting them to customers. You have another worker who's in the back room doing the bookkeeping. Say they make $50,000 also. Only the sales floor worker would be considered a selling expense to the company because they are directly part of selling the goods. People working behind the scenes are not directly part of selling the goods. Yeah, everyone works together for one common goal, but they're not directly part of the selling experience. So things that you would see as selling expense specifically is salaries for sales staff members. Okay, the sales floor people who are working on the sales floor. Rent expense or office rent expense only for the selling space itself. So say you have two buildings, you have, just pretend you're Walmart. You have a store where you sell your goods, and then you have a headquarters where you have like your CEO who works, you have your accounting department, you have people creating future goals and plans. The physical space that you have to pay for to sell your goods, that's a selling expense. The administration office, that is not a selling expense. So if you have rent expense just for the selling space, then any supplies used specifically for that selling space, for that store, again, it's promoting the store that is selling the goods. So supplies used in the store counts, supplies used in the administration office does not count. And then advertising counts as selling because you're advertising your goods. That's part of the sale. So you're advertising what to sell. And these, there's no subtracting. It's all just adding them together to get one big sales figure. Okay, now if you look up here, you'll see there's rent expense, selling space. There's sales salary expense. There's advertising expense. You see there's office salary expense. Remember I said office workers don't count for the selling expense. Rent expense for the office space doesn't count. Office supplies doesn't count. So just keep these things in mind. Advertising expense is there. Okay, so you're calculating the selling expense. Now to the income statement. The multi-step income statement, the bigger one. It is basically, I guess you could say, the reason why maybe we do some of these calculations beforehand is just to help you put them into the income statement. As you see here, I have a more detailed setup of the income statement. I don't have the figures. I'm not going to show the figures, of course, but I have what goes in each column because a multi-step income statement can be a little crazy. And it's just you start with your sales, and yeah, you do have to basically do the calculation again. Start with your sales, subtract your, your sales discounts and your sales returns and allowances to get your net sales. Okay. Just like we did up here. Then you have cost of goods sold. Okay, that is how much of the inventory, what is the cost of that inventory that you sold? That's given to you in the problem. Cost of goods sold. So net sales minus cost of goods sold is your gross profit. Okay, again, this is giving you more figures, more detail, this income statement. Now you list your expenses. First is your selling expenses. I could probably bold that to show it's a heading. And then you list those selling expenses we just talked about. Sales salary, rent expense, store supplies, advertising. You list them, and then you get your total selling expense. Then general and administrative expenses is every other expense you haven't used yet. So as you see, it's that office salary stuff we talked about, the office space, the office supplies, anything that doesn't have to do with selling expenses and nothing cost of goods sold. So you put in your general and administrative expenses, list them, and then total them. Then you take a total of all your expenses. So that's your total general and administrative expenses and your total selling expenses. Total that. Your net income is the gross profit figure, not the net sales figure. Gross profit minus the total expenses. Okay, don't use net sales. Gross profit minus total expenses. Now, on the single step income statement, again, you're going to see you're going to like it way more. You just put in your net sales that you've already calculated up in the very beginning. So the net sales, the sales minus the discounts and returns. Then you just list totals of the expense categories. So you just list cost of goods sold. You just list the total selling expense. So whatever you put right here, total selling expense, is what you put down here. And then whatever you put as total general and administrative expense, you put down here. Then you total your expenses. Then you do net sales minus total expenses. The single step or the simple income statement does not have gross profit. So you just do net sales minus total expenses. And that's your net income. When you do this net income will always be the same as this net income. Because it's using the same figures, the same values are going to wind up being used. It's just this breaks them down, this puts them all together. So when you do this, if you get 100,000 as your net income here, and that's not the right answer, 100,000 here and 120,000 here, for sure something's wrong. So at the least, make sure they equal. Okay. Yeah. So that was a quicker wrap up. I know it's towards the end of the week, just so you guys have it to look at and look over. Any questions? Let me know.